What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about one of my favorite stocks in the stock market right now, and that is Alibaba stock. I do own a position in Alibaba stock, but there is something very interesting going on with this company. We have an investor that is known to be a very active investor, try to get on boards of companies, basically buy up a bunch of shares and kind of throw their weight around in the boardroom and try and get things done. And some of the stocks that they have done this with in the past have actually ran up over 1,000%. So we're going to take a look at who this investor is. We're going to take a look at what has previously happened with some of these companies. You've obviously heard of these stories. We are going to go into them, but overall, we are going to end the video by taking a look at my opinion on all of this. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Before we jump into all of that, let's take a look at the stock chart and where the stock has been over the last few weeks. So here today, we can see that the stock is actually down 1.71%. Over the last 5 days, it's actually down 1.17%. And over the last month, it is actually up almost 30%. So this stock has gone on an absolute tear over the last month. It has ran up in a very massive way. And, over the last couple of days, we've seen it kind of trade down a little bit, but we've also seen the broader market trade down over that period. And the investor that we have actually seen start buying up Alibaba shares is none other than Ryan Cohen. So Ryan Cohen is known for his investments in GameStop and Bed Bath & Beyond. And Ryan has a very interesting story because basically he is known as the founder of Chewy. And Chewy is one of the biggest and most well-ran pet food companies in the world. And it was actually sold off to PetSmart, you can see here, in 2017 for $3.35 billion. And from there, basically what he started doing is looking at stocks and investing into stocks. And one of the stocks that he picked up on was GameStop. So in September of 2020, he disclosed that he had a 10% stake in GameStop. And from there, he basically joined the board and became, the chairman of the board for GameStop. And when he was doing that, he was also looking at bringing on members from Amazon and Chewy and executives from other basically companies and trying to bring them into GameStop and really turn the company around. And when stock investors saw that, and obviously with the hype from retail investors, the stock for GameStop ran up over 1,500% in only 2 weeks, which was absolutely insane. We saw it all over the news, basically just went viral, an absolutely crazy story. And then from there, he did something similar with Bed Bath & Beyond. So he ended up buying a 10% stock share in Bed Bath & Beyond and really started to try and turn that company around. And he ended up profiting around $68 million from his investment in Bed Bath & Beyond. But also, important disclosure is he's also in a federal lawsuit that was filed in August 24th of 2022, basically alleging that he was in a pump and dump scheme in Bed Bath & Beyond. So obviously there is good and bad that comes along with Ryan investing in Alibaba. But really, what is his intent? So he has built out a position in Alibaba that's worth hundreds of millions of dollars. And the biggest thing that he is focused on and has actually gone to the board of directors for Alibaba with is increasing their share buybacks. So back in August, he actually went to the board and basically said that the stock at its current price was undervalued and that Alibaba needed to ramp up its share buybacks. So that is obviously going to be beneficial to investors. When you have less shares outstanding, that means the shares that are out there are worth more because you own a larger percentage of the company. And that also is congruent with their EPS. So obviously, if you look at their EPS, that's earnings per share. If the number of shares decrease and the earnings stay constant, your EPS will actually increase because, again, there are less shares out on the market. With that, there are still problems that are facing Ryan. The biggest thing being the Chinese government. And this has been a problem not only for Ryan, but also for just Chinese tech industry in general. So Alibaba and Tencent have had a number of fines put against them. They've also had a lot of regulations put against them, trying to restrict the business that have really hurt it in a very massive way. And obviously having someone from, Ryan's actually from Canada, but basically from the Western, society trying to step in and have influence over Chinese companies, China will not like that. We've seen that in the past with their basically restrictions on audits from US auditing firms that almost got over 200 Chinese companies delisted. Obviously, China is against, any sort of interference from the West. But the big positive with all of that is that China seems to be actually getting away from some of those things. So they have actually started to look at getting rid of their zero pandemic policies. So this will open up their economy a lot more and benefit a lot of companies throughout China, especially Alibaba. And then they've also started to, ease some of their restrictions on these big tech companies. So there is kind of the flip side of the coin where, some of these restrictions are starting to go away, and that is going to be a positive thing. And honestly, China is in a very tough situation right now. We have seen, their housing market collapse, and they have started to revert a lot of, these negative policies that have affected their economy in a very negative way over the last couple months, because they see, what's happening to their economy and see that, it's not sustainable for them to basically keep, restricting all these businesses and, lowering their GDP growth over time. We have seen actually some success from what Ryan has actually done. So again, we talked about how he went to the board back in August to ask for buybacks, and Alibaba actually approved a $15 billion expansion of its already existing $25 billion buyback program. So this was back in November, so just a couple months after Ryan spoke to the board, which again, who knows whether his influence actually caused this increase in buybacks, but overall this is positive for shareholders. Again, increasing buybacks from Alibaba is going to remove shares from the market and basically increase shareholder ownership of the overall company. And interestingly enough, actually Ryan was asking for additional buybacks again back here in August, so we could see that that stock price was around $90, but when the buybacks were actually approved was all the way down here in November, and we can see that the stock at that time was closer to $65 to $70. So overall, the buybacks were perfectly timed, almost at the bottom, with them approving it in November. And since then, we have seen the stock go on an absolute tear from $65 all the way up to almost $120. So almost a 100% return from where their bottom was at. So absolutely insane. In my opinion, I don't necessarily think that Ryan had a huge influence on the board. I think that there's, other factors that are going on here. A lot of companies were announcing additional buybacks. I think Alibaba knew that their stock had dropped, in a very significant way and was undervalued compared to what was going on in China. They probably also at that time kind of had information, knowing that the audits were going to come through in a very positive light. That's kind of around the time we were starting to get rumors that, things were looking good in China and things were, going to be approved and the companies were going to stay listed. So overall, I think there's, a lot of other factors. I don't think Ryan's going to have a whole lot of influence. I think the Chinese, government is going to be a lot more influential, and they're not going to let a Westerner basically come in and run the business. So that's all my opinion. I think, Alibaba, I do own the company, shares in the company, and I love the company for the long term. I do think they can actually get back to double-digit growth. That's kind of one of the things that I'm hoping for, over the next year as they open up a lot more of their economy. I think we'll start seeing these growth numbers come up. Obviously, over the last couple quarters, they've had a few bad quarters with EPS being negative at certain times. But, I think as the economy starts opening up in China, we'll see that all turn around. So overall, I'd love to hear your opinion down below. Do you think Ryan buying into the company is a positive thing, a negative thing, a neutral thing? Doesn't really matter. I guess I'd stand somewhere as it doesn't really matter. But I'd love to hear your opinion down below, as well as if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.